Gary, if I was looking for some information, who are people you'd recommend I follow, listen to? Where are you going to for information on? I got two more for you real quick here. First one, how quickly should I be trying to make money back when I'm investing in the market?
Take your time. It's okay. If you're not ready to invest in individual stocks yet, then start with index funds and invest a little at a time.
Gary, moving to thing number 5, we're going to wrap up today with investor education. Gary, thing number 5 today, if you want to start by just giving some tips for beginning investors, and then we're actually going to get into a little rapid fire round here at the end and just get your quick thoughts on a few key points for those new beginning investors that are starting to get into the market or starting to want to understand more about the market and positions.
So, Rob, let's give this a little bit of an introduction, and think back on, for a lot of the young men watching this, think about, when we started as little leaguers, right, playing baseball. And you start by hitting the pitching of 10-year-olds, right? And even younger than that, they usually have like a dad or a coach pitching underhand. And then, you get a 10-year-old pitcher, and then you get to high school, you face high school pitchers, you move on through colleges, the minor leagues. And then when they're ready, a few people get to face the very, very best pitchers in the world, and they get to work their way up. It's not like that in the stock market. Our schools don't teach basic finance. And in the stock market, on day one, you want to invest, you're facing off against Citadel, Millennium, BlackRock, Fidelity, and of course, DKI, right? On day one, you're going up against the best in the world and people who have been doing this for decades and have resources beyond what a beginning investor has. So let's talk about it. If you want to avoid rookie mistakes in investing, let's talk about how you can make smarter choices today. And Rob, I know you got a rapid fire lightning round, so let's go.
Cool. Gary, let's start with the most fun one and probably sometimes most polarizing meme stocks. I want to get that 10,000% return. What's all the rage? Should I be investing in these? What are they?
Yeah. So, there's a lot of excitement about meme stocks, non-Bitcoin crypto, zero data expiration options. And the reason people are drawn to it is it's fun, it's exciting, and if it works, you make a lot of money quickly. People on these zero data expiration options, they might make 40, 60% in a day. Non-Bitcoin crypto and meme stocks, they're making more than 100% in a day. And it's great until you get wiped out, right? And so these things are likely to result in massive losses over time. If you are not an experienced and nimble trader, I would say that doing something like this is like going to a casino where you can win a ton of money and then on one roll of the dice, oh no, you lost your whole bankroll. I would avoid this. If you really want to have fun with this, set aside a tiny percentage of your assets. Do it for entertainment, like you might bet on a football game with your friends, a few dollars at a time, or just go to a casino. But don't consider this investing, and don't put real money that you can't afford to lose in things like this.
Gary, moving on. Should I listen to the media when it comes to investing?
Absolutely not. The press is not your friend. Here's what I want all of the amateur investors to know, that by the time it is being discussed in the Wall Street Journal or on CNBC, professional investors have already responded to the information. Professional investors have not only seen it, they've responded. In fact, I'm going to give you a great example. Last week, Josh and I worked on the CPI report of something we talked about earlier in this episode. The amount of time it took me to absorb the entire CPI report and know what it meant was under 1 minute. It took 30 to 45 minutes for Josh and me to put out a 10-page report for people to read. By the time you are reading it, by the time anybody has had the time to write it, professional investors already know, the market has already reacted. At that point, the futures markets were already down, right? So I know what's happening, but by the time I can write it and get it out to people, it's already stale. The futures markets have already moved. The press is not your friend here. You should be doing your own work or subscribing to services that will help you and thinking longer term. Do not be trading the headlines if it'll be too late by the time you see it.
Gary, moving into what you should be looking for, if I'm looking to invest in a beginner and I am a beginner, what should I be looking for in the businesses that I'm deciding to invest in?
Let's start by looking for businesses you understand. Some businesses are really complicated. And if you don't understand a business, that's fine. Read about it. Just go read about what they do. You can literally pull their annual report, and the first 10 pages of the annual report will be a basic description of the business. They'll tell you what they do. And then I would tell you, don't just look at the company itself, look at their end markets. And so this was something we talked about in last week's version of the 5 things. So everybody listening to this, you probably know what NVIDIA does, but then look at the spending plans of NVIDIA's customers. We saw Meta, Facebook, Alphabet, Google, Microsoft, they all were increasing their AI-related CapEx. And so when we see that, we know, okay, great, they're going to be buying that Blackwell chip that NVIDIA is coming out with. And so look and understand the business and then just go to the next level. And none of this is complicated, but it does take some time and effort, and spend some time reading about these things. You don't have to become the world's greatest semiconductor expert, but you should have an idea of what these companies do, who's buying their product, and how those companies are doing. Start with those basics, but invest in things that you understand.
Great stuff, Gary. I could not agree more. I think that's a great jumping off point. Gary, I think one of the other things is like numbers, finance, accounting, right? How much do I need to know about those things in order to invest as a beginner?
All right, that's a complicated one. Let's simplify it. So my first job out of school was doing mergers and acquisitions at Morgan Stanley, and we were spending 80 to 100 hours a week building financial models that were insanely complicated. You do not need that expertise, right? It helps me that I have it. You don't need it. Let's talk about the basic things to look for. And again, remember, you're looking at businesses that you understand, where you understand what they do. So let's talk about basic financials. You want to look for high revenue growth, improving operating margins, right? So as revenue grows, does the company keep a larger percentage of it? Look for rising earnings. Know if the cash flow, look at the cash flow statement, know if it's positive or negative, if it's growing or shrinking, right? And so some people will say, wait, I don't know where that information is. Really simple. SEC.gov, that's the Securities and Exchange Commission, that's their website. It is a free and publicly available website where companies will file their reports. Now, the annual reports are called 10K, and the quarterly reports are called 10Q reports. And so if you go, you can see the income statement, you can see the cash flow statement, you can track whether revenue is growing, you can look at their operating margins, just divide operating income by revenue. Is that going up or down? Look at the cash flow statement, just look at cash flow from operations and subtract from that capital expenditures, right? And these are all line items there. These are basic calculations that you can do with basic arithmetic. Now, is it as much fun as betting on a meme stock? No, it actually requires some work. But I promise you, if you are watching this channel, if you are subscribed to this channel, doing this basic arithmetic is not beyond you. These are things that you are capable of yourself. And if you want to learn to invest, these are the basic places for you to get started. None of this is beyond you. You can do this, I promise.
Gary, we got a few more questions. We'll go rapid fire with these last 3. Gary, if I was looking for some information, who are people you'd recommend I follow, listen to? Where are you going to for information online?
I think the key thing is you want to find useful predictive sources that speak to you at your level. If you don't understand it, find something more simple. A book that I read when I was in college by Peter Lynch, One Up on Wall Street, I think it's still relevant and can be understood by new investors. On macro, I really like Lynn Alden. Unicus Research does incredible research on short selling. They'll teach you what not to do. If you like energy, I like Mark Rosano, Big Oren on Twitter or X now. Tracy Schuchart is terrific. She's posting all day and terrific to talk to. And of course, I'm going to recommend Deep Knowledge Investing. Many or all of these services do offer a free and a paid option. Following them on X is free. And what you can do is sign up for their free option If you like it, if it's useful, then do the paid option. You don't have to throw a lot of money at this right away. You're not going to become an expert by throwing tens of thousands of dollars. Start with the free options, start by following good people on X, and start to learn and figure out, where you want to go next.
Great stuff. Could not agree more, Gary. And yeah, head to deepknowledgeinvesting.com. Check out our premium subscription options and the access that you'll get to the DKI portfolio as well as Gary. Gary, I got two more for you real quick here. First one, how quickly should I be trying to make money back when I'm investing in the market?
Take your time. It's okay. If you're not ready to invest in individual stocks yet, then start with index funds and invest a little at a time. It's called dollar cost averaging. Maybe you put in $50 a week or $100 a month or whatever you can afford. You don't have to figure it all out immediately. You don't have to commit capital before you're ready. The basics are fine. Proceeding slowly is fine.
Amazing. And Gary, finally, who should you go to for help, right? I'm a beginner investor. I know you mentioned some people online, but who else out there is someone from a personal connection standpoint that I can go to for help in the financial markets?
So, Rob, the people I was mentioning before are the primary sources. Those are the people that I read and talk to, and those primary sources are terrific. But if all of this is overwhelming and it's more than you want to take on yourself, it's okay to go to a financial advisor. Not all of them are great, but we work with some of the best at Deep Knowledge Investing. Reach out if you want professional help from somebody registered to do that. And I am not a registered investment advisor. Let's make that clear. I am not registered to do this. But if you guys want help, I will be happy to connect you with somebody that I respect. At that point, you talk to them. You make your own decisions. You decide yourself if what they're offering is right for you. And it's okay if it's not. But, we can point you in a direction that I think is wise. At that point, you make your own decision.